Welcome everyone to episode 26 of the Sloth Investor podcast. Once again, I'm joined by Jay, and this week Jay and I are joined by a very special guest indeed, Nikki Dunn. Nikki is a certified financial planner. She is the founder of She Talks Finance, a women-led financial community. She's the co-host of the We Talk Money show. She's an advocate for women in finance and financial literacy, and you'll find her at shetalksfinance.com, and her Twitter handle is at shetalksfinance. Nikki, how are you today?
I'm fabulous. Thanks for having me. How are you guys?
Great. You know what? We're in Hong Kong right now, and where are you right now?
I'm in Bali.
Okay,
So
so
it's
I don't know if we're getting hit with a typhoon right now. Are you feeling the effects of that at all? We're in Hong Kong, and Hong Kong's being hit with a typhoon.
no, we're not feeling that. But it is rainy season, I think, starting here. So, but it's so funny because when you guys reached out to me, I was talking to you in Eastern time zone, and then I realized you were on the same time zone as me. So it worked out because this time zone can be tough.
It was great. I mean, so many occasions we've had to contact people and kind of go into kind of mental logistics. Hey, what's your time? Should we start at 8, start at 9? But with you, Nikki, it was so easy. So it was fantastic.
I'm so glad.
Yeah,
It's
absolutely.
a doubly perfect that we have you as our first live video guest on the Sloth Investor podcast.
Love it. Love it. I should have
Exactly.
put more makeup on, but whatever. We're here.
It's fine. It's fine. Nikki's fine. Okay. So, Nikki, let me explain. So, I briefly spoke to you about this within our communication, but I discovered you just by accident on YouTube and, accessing your content. And I quickly found myself binging upon video and video and video. And your videos really resonated with me because Jay and I are passionate about financial literacy, particularly for beginner investors. Okay. Simplifying investing for all those people out there that didn't receive the financial education they really should have done, that isn't taught in schools. Okay. So, something that really struck a chord with me was an analogy that you used within one of your videos, okay? And it's related to golf. I've just got it here in front of me. So you mentioned trying to save and invest without financial goals is a bit like swinging a golf club blindly. So perhaps would you like to expand upon that for our viewers, for our listeners right now?
Yeah, sure. So, look, a lot of people don't know specifically what they may want in retirement or in the future, even the near future, right? But it's very important that if you, no matter where you're at, whether you have specific clear goals in your head or you don't and you're feeling a little lost, the one thing we know is we are going to need money to survive, right? So we're going to need money to pay the bills. So I think the first step is if you do have goals that you can identify. Um, I think if you're not keeping those goals in focus, it's going to be very easy for you to squander your money in maybe the wrong ways because you're not going to know, how much money to allocate to certain things at what times and how to properly invest that money for that specific goal. So I think that when people come to me and they're like, I just don't know where to start, I feel lost. I know I need to be investing or changing my money habits or doing this. The first place I go is, okay, let's start with goals because without goals, we don't know what we're doing. We don't know what we're saving for or investing for, how we're going to reach that goal. And then,
Sounds a lot
so
like
that's
education.
why.
Actually, we do
Mm.
that in education with our students. We do goal setting before we go deeper. So it sounds a lot like sort of an educational philosophy.
Yeah, exactly. And then the people that are like, I don't know. I don't know what my goals are. I don't know what I want to do in retirement. There's still something to work towards in that scenario, in my opinion.
Mm. And Nikki, while you were speaking there, a term came to my mind that I've used on a podcast before. Jay and I have spoken about it. It's that idea of like a future fund. Because for me, I feel like a big issue in the UK, my home country, is that this whole concept, this idea of pensions, invariably there are connotations of, an elderly guy, an elderly woman with a walking stick, wrinkles, walking along the street. And I just think tying into what you're mentioning here about goals, that concept of a future fund, whether it's, saving up, investing for, a year's travel in a couple of years' time, or for your children's education, or whatever it might be. I just think that concept of a future fund really continues to resonate with me. Any thoughts about that at all?
Yeah, so when you say future fund, are you thinking like retirement fund?
Yes and no. I mean, yes, retirement, but also just if there are any kind of more maybe medium-term goals at some point in the future. Maybe you're looking to travel, in 5 years' time. Maybe you're looking to take a year off because there's a hobby you really want to take some time to kind of work towards and excel within. So that's really kind of, yes, retirement, but kind of a little bit more nuance as well. There could be other aspects to it as well.
Okay, and the main question is,
Hmm.
go ahead and repeat that question again.
Yeah, so my point would be, so in terms of your own thoughts, your own philosophy, thinking about a future fund, thinking about investing, does that resonate with you at all, that whole concept of a future fund investing for, yes, a certain point in the future, but not necessarily retirement? It might be other kind of medium-term goals as well that you're investing for, not even necessarily retirement in all, in every respect. Yeah,
Absolutely, yes. Yeah, I just wanted to clarify because
yeah,
I've
sure.
never heard the term
Oh,
future
sure,
fund.
sure, sure.
So
That's
I
okay.
just wanted to make sure that I wasn't conflating that with like retirement. But yeah,
Okay. Yeah,
absolutely. I
yeah.
think that part of the process of starting with goals is figuring out how much time you have, right? You are going to be doing something differently for a goal that's maybe 1 to 2 years out versus a goal that is 5 to 10 years out versus a
Mm,
goal that is 30 years out, right?
mm, mm,
And so I do think that um, it's important to first of all figure out the goals and then prioritize the goals and then give the goals a timeline, right? And that's kind of the step through that process so that you can figure out how to invest for your quote unquote future fund. Because you don't want to be in a situation where you're trying to hit a specific goal in 5 years and you either didn't take on the right amount of risk that you needed to hit that goal, right? You had time and you didn't take advantage of time. Time usually means you can take on more risk. Or you just want to make sure that you're going to actually be able to be in a situation where you're not stuck in a bear market like we're in now, and that future goal, you ended up not being able to do anything with it because you were pulling money out in a bear market. So there are things you have to finesse with the timelines and how you're investing for those specific timelines.
mm.
I
Okay.
really like. I was listening to one of your YouTube episodes, and you talked about 6 things that people need to know when they get started investing. And you're a certified financial planner. I'm very much a layperson, and we're coming at it from 2 different lenses. But I really like how you simplify your approach. And at the Sloth, here at the Sloth, we're all about simplifying things for the average person. And one of the things you said in that I I've never articulated it, but what I really liked about the fact you pointed this out, you need to understand, what do you have coming in. For myself, I do a monthly spreadsheet of, I know how much expected money coming in, expected money going out, and then what does it look like at the end of the month. And I do that throughout the year. What we hope to finish each month with, what we hope to finish the year with, and then that allows me to allocate what I'm investing. Can you speak a little bit more too about how important it is for people to know how much money they have coming in each month, to have an understanding about their streams of revenue?
Yeah, it's funny because most people that I talk to don't track their cash flow.
Yeah,
They're not tracking what's coming in and what's going out because it's time consuming for some people. You get caught up in life. The last thing you want to do is sit and play with spreadsheets or, deal with numbers, right? And so a lot of people, surprisingly, even though it's such a simple concept, they don't do it and they have no cash flow clarity is what I call it. They if
yeah,
you don't if you don't know, part of our job as as taking care of our money and managing our money well, right? Part of our job is to make sure we're allocating money to the right places at the right times. And you can't do that effectively. And this is part of the blind thing, right? Golfing blind. You can't do that effectively without understanding what your cash flow is and what you have to allocate. So that kind of ties into the analogy that I was talking about earlier, how you have to have a plan. If you don't, and if you don't have goals, and if you don't know what your cash flow is, you're just kind of swinging at air. And that's
Yeah.
that's it sounds simple, and it's like, oh, of course, Nikki, duh, right? But believe it or not, there are a lot of people that don't do it. They don't track it.
And it for someone who had set this up late in my life, it became much easier to do every month because the spreadsheet. Once I got the spreadsheet set up, it was quite easy to track. But for me to dig deep and understand, look at my credit card. Well, where is my money going? How much am I spending each month on dining out? How much am I spending each month on gas for my car? Those simple things, like all of a sudden you're like, oh man, wow, I dropped that much there. It gives you a different perspective of your income. So I guess what I'm saying too, I brought me back to sort of the idea of swinging a golf club blindly, because you really need to understand where you are, and that's part of your goal setting, to know where you're going.
Exactly.
Yeah. I love that phrase, cash flow clarity. Really easy to remember, but so
Yeah.
meaningful as well. A really great phrase. Nikki, one of the pieces of content that I really liked that you kind of put together was your reaction to TikTok videos. So Jay, as far as I know, we can't access TikTok in Hong Kong, can we? Is that correct, Jay? No, we're not able to.
No, we cannot. We
No,
cannot.
we
It's
can't access it.
blocked.
Yeah, so it's fascinating for me to view your reaction to a series of different TikTok videos, and kind of, I wondered if you could just tell us a little bit more about the kind of financial illiteracy that you kind of viewed and you observed. And for those listeners and viewers who are kind of unaware of this whole perhaps mini phenomenon of TikTok investors, can you tell us a little bit more about that and what you uncovered in terms of what you viewed?
Yeah. So there's actually a lot of bad money advice on TikTok that
Mm.
we've discovered. There's been other people that have done reaction videos, but people really love that content because it's funny and that's entertaining, but it's also, I'm trying to educate at the same time. So I don't like to make people feel bad when I'm reacting to these videos, but if this is what I have to do to get through to people and get them correct financial advice, then that's what I'll do. But yeah, I think that there are a lot of people that unfortunately, the world of finance, especially the world of taxes, um, and many things, it can be very convoluted, and you have to know how to navigate all of the intricacies, right, of finance. And this is why finance tends to push a lot of people away, because even something as simple as in the US, an IRA contribution, right? You would think, oh, okay, pretty simple, right? You either contribute or you don't contribute. No, there are income qualifications. There are things that you have to watch out for if you have an access to a retirement plan at work. So there are these little nuances that a lot of people just don't know because they haven't studied it in the same capacity as a true financial expert has, right?
Mm.
Somebody who is a certified financial planner, or a CPA, an accountant, or somebody who has a CFA designation, right? These are people that have studied finance in a very intricate way. And unfortunately, there are a lot of people out there that want to talk about finance and how to make money through investing and whatnot, because that's what gets eyeballs and views and sales, but they may be providing incorrect information.
Mm.
And so I found that you have to be very careful with who you're listening to and what you're listening to, because I was pretty surprised when I heard some of the things that were just downright wrong. They
Mm.
were just it's incorrect stuff.
Yeah.
And so my goal was to try to point that out and follow it up with the facts.
Yeah. And let me guess, Nikki, am I right in thinking that the term IRA, in terms of that, would not be something that high school students in the US would be so familiar with? I know for myself as a a guy from the UK. I've read, numerous investing books, got many behind me. And of course, that's not something that, it's a term that I'm familiar with in terms of, coming from that British background, but IRA has come up again and again in terms of the books I've read. But am I quite simply right in thinking that, a US teen, 16, 17 years old would not be educated about terms such as that in US? Yeah.
No,
Yeah.
they will not have any idea unless their parents teach them.
Yeah.
Some kids come from very fortunate situations where their parents maybe started a Roth IRA for them when they were 16 and started a job, right? And maybe helped them put some money away. But a lot of people, unfortunately, don't have that luxury, and they don't learn about it until sometimes your 30s.
Well, yeah.
That's
Yeah.
that the irony of all my story is that my dad was a certified financial planner, and he was a little more old school. Just give me the money, I'll take care of it. Wasn't interested in helping us understand it. And when I got to Hong Kong, I was like, oh, I'll find someone who's can handle my money here in Hong Kong. And it ended up being a massive mistake, which resulted in me having to understand, take control of my finances and understand my situation a little bit better, which was in the end a quite empowering thing. But at the same time, there are experts who you do really need to lean into. I know for myself, even right now, I still have an accountant who I help look at my numbers with, because I need their expertise, their expert training and their eyes to understand. I have a business on the side that I need their knowledge to help me understand the numbers.
Yeah,
Absolutely.
absolutely.
Yeah. Just something we spoke about in the podcast as well is just in-group bias. I was certainly someone that when I was growing up, whenever I heard about the stock market, it was invariably the case that, there'd be flashy headlines in the news, volatility, there's a sudden plunge. And I grew up in a family, neither of my parents invested. It's not something we spoke about. So in-group bias is so powerful. And I think for those kids, those teens who have no prior history in their family of investing, it's even more difficult for them. It really is. Nikki, I don't know if you're aware of this, but Jay and I sometimes speak about the Sloth Investor Dictionary. We've had a few podcasts dedicated to the Sloth Investor Dictionary. And in our very first podcast on the Sloth Investor Dictionary, I think we looked at the letters A to E. And of course, when it came to C, we had to speak about compound interest. Okay, we had a great time talking about that. But in hindsight, Nikki, I actually think now that perhaps we didn't speak enough about the negative side of compound interest. And you, I know, are someone who, you're quite knowledgeable and you've spoken about that within your own content. So for our listeners now, for our viewers, would you like to touch upon the negative side, the negative aspect of compound interest?
Yeah. The negative side, it's basically debt, right? When you take on debt, it's particularly high interest debt. This is where compound interest works against you in such a crazy bad way. When we think about making money and growing our money, okay, yeah, compound interest, invest in an index fund, earn your, 8 to 10% return. That's going to compound over decades, and you're going to end up with X amount of money, right? And it sounds great. But what people aren't thinking about is that compound interest, just as much as it helps you grow your money, it can go the opposite way and help you lose a lot of your money, or it can just suck you dry, right? And that is because high interest, just as if you were making a high return in the stock market, you'd grow your money very fast. Same goes on the other side. If you have a very high interest rate on your debt and you're not paying it off, it's going to quickly grow into an amount of money that's going to be not very manageable for paying off if you're not careful. So the debts grow if you're only paying the minimum payments, so you have to definitely watch that. The main culprit of this is not a mortgage. Mortgages are typically lower interest, maybe not so much anymore with the changes recently. Auto loans is not really in that category either, typically, but now we have to watch that a little more carefully now. The real culprit is credit card debt and personal loans. Those two are the ones that if you're not careful, they can really get you and compound against you.
Absolutely, absolutely. So critically important, isn't it, that, in our contemporary life, particularly, youngsters, they don't succumb to social media and what they see and trying to keep up with the Joneses, and really important that like they're cognizant of that negative aspect of compound interest. Really are.
Credit card debt, that comes in at around over 20%.
It's
I
unbelievable.
I'm someone who pays off
Absolutely.
my so that's incredibly high.
Imagine how quickly you would get wealthy if you were earning 20% on your money a year, right?
Yeah,
Okay,
right.
imagine how it's like crazy. You'd be so wealthy. But now think about it the other direction. It's when you think about it like that, it's like, oh wow.
Yeah,
It's taking away
yeah,
it's just piling on, and so it can be a financial ruiner for sure.
yeah. Tremendous
And I
opportunity
guess that's why
costs.
some strategies, when you're trying to get some people back on track, that you take their credit card and you cut it up to eliminate that sort of the opportunity for them to spend more on their credit card beyond their means. It makes sense now.
Mm,
Yeah, it
mm.
depends on the situation, of course, but yeah, I mean, if people are having trouble controlling their credit card spending, then you have to definitely approach that.
Yeah,
It could be a behavioral issue, it could be a numerous amount of things, but yeah, you definitely gotta control the credit card spending if you're not paying it off in full every single month. That's the key.
that's the thing, isn't it? Yeah, that's the thing. Now, Nikki, something you touched upon with your audience is three essential questions for building your dream life, I believe. And I found that fascinating. And for those listeners who haven't been fortunate enough to kind of view that content, to listen to it, would you be able to touch upon that now?
Yeah.
Yeah.
So the three Kinder questions. These are questions that are asked. Usually, financial planners will, when they're working with somebody, they'll start and ask them these very deep questions that help get out of people what they really want out of life. Because one thing that is very easy to do is you get stuck in the rat race of working and just trying to get by, trying to pay the bills, that you don't think about what you truly want out of life, right? And ultimately, all of us, we all want to live our best lives. We all want to uh, live what I call your perfect average day. If you had all the money in the world, that's one of the first questions. If you had all the money in the world, what would you do with your day? And you can't limit yourself on answering that question and say, oh, well, I'm never going to have all the money in the world, so why would I even bother answering that? You can't do that. The point of the three questions is to truly let yourself dream and not try to have self-limiting beliefs. So you start with what would you do if you had all the money in the world? And then the next question touches on, if you were told by the doctor you only had 5 to 10 years to live, um, basically what would be going through your mind? Like, what would you want to be doing with the rest of those 5 to 10 years? Some people may want to just spend time with their families. Some people may want to travel. And so thinking about that just kind of pulls out of you what you really, really enjoy doing and want to do more of. And then the last question is, if you were told you only had 24 hours to live, what would you feel like you missed out on? Who do you feel that you didn't become? What do essentially, what do you think you would regret? And they're kind of dark questions, but I think that people don't like to face those types of questions, but how mu it's funny when you sit down and you journal these questions and you truly let yourself do it, what can come out of it, right?
Mm,
You might realize, oh my gosh, you might find things that you can literally make changes in your life on now without needing all the money in the world, right? Because maybe you just figure out that you're not connecting with a family member as much as you need to or want to, or you could travel more, but you're just not doing it out of fear or something like that. So I think the questions are helpful to elicit, just get some emotions out of you so you can put down on pen and paper what you really want and not limit yourself.
mm.
And then from there, you work on, okay, how can I make changes in my life either now or in the future to get where I want to be. Even if I just add one thing that came out of these 3 questions into my life, even if I'm not living my perfect average day, but I added in like one change or one thing, I find that to be a win. So yeah, that's the 3 questions basically.
And what you're describing in EduSpeak is we call it a thinking routine, and it's about making your thinking visible. So helping people
Yes.
to gain clarity on their thinking and then making it visible, and that allows you to do some goal setting. So I again, what you're talking about seems to be what we're working with in education as well.
Yeah.
Yeah, exactly.
And when you mention relationships as well, that really resonated with me because recently I've been reading a great book called Balance by Andrew Hallam. He also wrote The Millionaire Teacher, Millionaire Expert, and he talks about kind of a four-legged stool in terms of one's own happiness. And again, obviously, you know, he talks about, okay, one would be having enough money, but two, maximizing strong relationships, our physical and mental health. And his fourth one is living with a sense of purpose. Okay. So I think for young people, it's really important to kind of know about the multifaceted way that we can be happy. And you know, talking to really young young kids, invariably it's like, oh, I'd like to earn this much money and have this and so on, but just recognizing the importance of those strong relationships, physical, mental health, and is there a purpose to what you want to do in life, what your goals. And as you grow older and older, I think you'll realize that. And I think that process of writing as well is key, because it's within the writing process that new ideas embryonically naturally emerge. So I think writing is key. And that's something I know that Morgan Housel, who's doing obviously the Psychology of Money, has also touched upon. So yeah, I'm glad you mentioned that.
Yeah. And
Yeah.
something to do too is if you have a partner, it's a good exercise for each of you individually to journal on your own and then come together and read through your journaling together and figure out, okay, well, where are we and what can we do to come together on some of these goals?
And
Mr.
that's
Sloth, you just
go ahead,
mentioned
Jay.
Morgan. Oh,
Go ahead,
you
Jay. Go
mentioned
ahead.
Morgan Housel.
Yeah.
You mentioned Morgan Housel. Nikki, are there any investors who inspired you? Like anybody that you really connected with as a sort of a certified financial planner? Anyone whose sort of philosophy that you can really sink your teeth into?
Yeah, I mean, obviously, like Warren Buffett. I mean, how can you not be inspired and love Warren Buffett? And just seeing his career and what he's done and his philosophies and listening to him talk and his tidbits of knowledge, it's just he's definitely somebody that I look up to and respect, obviously. But I do follow Morgan Housel as well, and I think that he's just got great stuff. There are a lot of people that there Nick I'm not going to say his last name right, but he just came out with a book, Just Keep Buying, I think it
Sure.
was the name of the
I
book,
know. Yeah.
right?
Yeah.
Did I get that right? I
Is it
don't want to
Nick
butcher.
Maggiuli? I'm going to butcher his name
Yeah,
too, but yeah.
I didn't
Yeah.
want to butcher
Yeah.
his last name,
I went for
but
it.
yeah, good for you. Yeah, he's got a really good philosophy that I think can appeal to a lot of people, and it's very
Yeah.
simple,
Yeah.
and it will probably help a lot of people become wealthy, right? So,
Yeah.
yeah, just kind of some of the newer investors that I follow. Um, yeah, so that's just a
Yeah.
short list, but
Yeah.
I have all kinds of podcasts I listen to and
Yeah.
people that I'm constantly taking in
Yeah.
information from.
I love Nick's blog content too. So not only, I've got a copy of that book as well. You mentioned Just Keep Buying, but his blog content is great. So he wrote a great
Yeah.
article several years ago about, the best thing to do in terms of if you have a lump sum, should you invest it all at once? Should you, drip feed? I won't go into it now, but that was again very informative. And circling back to Morgan Housel, I know, the Psychology of Money has been extremely successful in the last few years, but I think some people kind of don't appreciate and recognize that when he worked at the Motley Fool, he wrote so many great articles. There's one in particular that I love called The Tyranny of the Calendar. That's one of my favorite ones by Morgan Housel. But yeah, a ton of great content during his time at the Motley Fool as well. Definitely.
Yeah, it's funny you mentioned Nick's article about lump sum versus DCA. I've referenced that many, many times. Yeah, it's a
Excellent.
good one.
Super. Now, Nikki, something else you mentioned within your content, which I really loved as well and really resonated with me, and I know my father-in-law, is someone who truly believes in this as well, is that wealthy people are cheap. Okay, so I'd love if you could touch upon this a little bit more because you say those words, those four words, wealthy people are cheap. And it almost sounds like an oxymoron, like, what, Mr. Sloth, what are you talking about? But maybe could you touch upon a little bit in terms of what you mean by that?
Yeah,
Yeah.
yeah. Yeah, that video actually got a lot more engagement than I expected. It was kind of funny.
Yeah.
So okay. I know a lot of wealthy people. I'm friends with many entrepreneurs that have found great success in their careers. I myself, my husband and I have achieved financial freedom. So I know a little bit about like how wealthy people's habits are, and it's just funny because a lot of them that I know and talk to, they don't like spending money on things you think that they like spending money on, right? Like
Mm.
you one of my buddies, he's a deca millionaire, okay? And it's like he will not spend a lot of money on an Airbnb. He just stays like in simple places. Another friend of mine, multi-billionaire, one of the most frugal guys I think I've ever met. So it was just funny, and that's why I did that video, because I was like, yeah, man, they don't like to buy Ferraris necessarily and Lamborghinis and stay at the Four Seasons all the time. Like you would think, oh hey, you're super wealthy, you're gonna ball out and spend money on everything you can and all the finer things in life. But believe it or not, they're they're very careful and methodical with how they spend their money.
Yeah.
A no frills approach.
Just because they can afford it doesn't mean they do it,
Yeah.
basically.
Right.
And what you mentioned here really reminds me of the late Jack Bogle. Like we're massive fans of Jack Bogle's.
Oh
Someone
yeah,
who
of
who came
course.
in, yeah, who came into the Sloth Investor Hall of Fame. And I've recently been reading The Bogle Effect by Eric Balchunas, and he's actually going to be our next guest on the podcast in a few weeks' time. And I just had no idea how frugal Jack Bogle was. And obviously, he didn't achieve the same level of wealth that someone like Buffett did, but Jack Bogle still, acquired a significant amount of wealth. But it was fascinating to read within the book that he always flew economy. Could have easily flown first class. When he was at Vanguard conventions, he would, just take a few bites out of a sandwich that was half eaten, and incredibly frugal and also humble. A really humble man. Author Eric Balchunas mentioned how relatively easy it was to contact Jack Bogle, given his influence and fame within the realm of investing. And I think it's really fascinating, that whole concept of wealthy people being cheap, from the outset, just having those, really concrete financial concepts embedded, not wasting money. And yeah, I love the content that you created there. It's really good, interesting.
Yeah. Well, thank you. I appreciate
Yeah.
that.
Yeah. Now, turn into Mr. Sloth. Okay, Nikki, I'm not sure if you know, but I have 5 bedrock principles. You can see
I do. I listened to the podcasts.
any episode in particular that resonated with you that you enjoyed?
I mean, they were all great, but well, okay, yes, one of them specifically, one of your principles was
Ah,
my favorite.
fantastic. Now, can I ask you, Nikki, therefore, is there a particular bedrock principle that really resonates with you? What would you say, Nikki?
Yes, it was headstrong.
Oh, okay. Tell us
Yeah.
more.
Can I ask how so? I'm really curious about this. How so? How does that resonate
Yeah,
with you?
you wouldn't think, right? You would think time or no. So I'm really big on investor psychology. It's something that I spend a lot of time, teaching and working with people on, especially, DIY investors. And I tell them all the time that investing is 80% mindset and 20% pressing buy and sell buttons. And it's so true. Like the mental side, like right now, we are literally in a bear market and we're seeing some of the worst sentiment that we've seen in a very long time. And this is where champion investors are made, right? If you can get through this mentally and continue to stay headstrong and dollar cost average when times are tough, or add in more capital when valuations are lower, even though things are ugly. That's the stuff that's going to help you build a lot of wealth. And a lot of people do the opposite, right? They run to buy stocks and buy assets when everybody else is buying and at all-time highs and when everything's overinflated, and they run away when everything goes on sale. I mean, Warren Buffett said this, right? The stock market is pretty sure he said that, right? The
Yeah,
stock
yeah,
market is the only place where
absolutely.
everything goes on sale and they run out of the store,
Yeah,
right?
yeah.
So it's
Yeah.
so true. It's so true. So I think Headstrong is the one that stands out to me the most because I have spent a lot of time and effort on my own mindset, my own
Mm,
investor mindset, and being very strong and thinking and approaching it the right way when we're in these hard times. Because look, we're all dealing with drawdowns right now. We're all dealing with um, our portfolios that were at all-time highs just recently, and they're down significantly from the highs, or at least most people are, been unless you've been invested for a really long time and you have a really great average in the index or in stocks, right?
mhm.
So most of us are dealing with at least our
Yeah.
portfolios down, and it can hurt, it can sting. But the the thing is, you got to be headstrong, you got to stick with your plan, you got to continue to stay the course, and that is what's going to get you wealthy, not running away and pulling out your money when things get bad and
Mm,
getting panicky and upset, right? That we know doesn't work.
yeah.
And I was going to ask you, and you might have just actually answered the question. Where do, in your opinion, where do the majority of people go wrong in their investment strategy? What's one of the big mistakes you see um, quite often in your job?
Chasing the wrong strategy. Um,
Oh, okay.
you
What do
know,
you, can you
and
clarify that? What do you mean by that?
yeah, so what I notice a lot of people do is they try to chase trading stocks, short-term trading stocks, that strategy. They think that's it, that's what they're going to need to go to first to make a lot of money. And really what they should be doing is they should be doing a passive investing strategy first. Like that should be the first thing that you ever do is get invested in a passive portfolio, whether that's what that allocation looks like, that's a whole nother podcast, but um, get invested for the long run first. And if you have extra money to blow and you can afford to dabble into some trading later, that's something that you can always have a small bucket of money for if you really want to do it. But I think what a lot of people do is they go for that trading short-term stuff first, and then they move into investing once they've lost a lot of their money, because they're like, oh well, trading isn't working, so I guess I'll just buy an S&P 500 index fund and just hang. And so I just wish people would do it the other way around. Invest
Mm,
first, get your passive investing in. That's going to work hard for you for a long time. And then later, once you get familiar with the market, then you can try to play with other strategies. Um, if that's something that you really want to do.
mm.
But I do see that a lot, especially after the past couple of years with 2020, 2021 stock market mania. Um, a lot of people did that, right?
Yeah.
Yeah, I think and it's that time in the market versus timing the market kind of mindset, right? Um, that there, you even now you're still hear people like, oh, do you think we've reached the bottom? Do you think we've reached the bottom? And they're trying to they're trying to find the perfect time to get back in the market, but um, if
Yeah.
you take the mindset, it's 5, 10, 15, 20 years you're looking at, this month will mean nothing.
And it's funny, I was talking to somebody who is very successful, very intelligent, and believe it or not, he pulled all of his money out of the market, sold everything. I don't know if not too long ago, and I was thinking to myself, wow, like you're not someone I would expect to try to do that, because he freaked out like most people do, got panicky, pulled everything out of the market in cash, right? And we know that that can be a tricky game to play, just like you just
Mm.
described.
Mm,
So it's just sometimes surprising that a lot of people who you think would be doing the opposite, or knowing this stuff, a lot of people just don't. And it's not their
Yeah.
fault necessarily, right? This comes to education.
Yeah. And
And
again,
psychology, you mentioned the psychology.
yeah, it escapes me now, of course, but Nikki, you may be familiar, there's a great line, great quote from Warren Buffett about IQ. It's not necessarily those with the greatest IQ that are the best investors. It's about temperament, remaining headstrong. And I love what you said as well about just ensuring that you have that core solid foundation in place. I think that's great practical advice for people. Okay. So before you go and dive into anything that's a little bit more risky, let's say, make sure you have that core solid foundation in place, i.e. an index fund, for example. I think that's excellent advice. So Nikki, I know that you're an advocate for women and finance and financial literacy. Could you maybe talk to us for a little bit of time about where you see that going and any initiatives that you put in place, what you've been up to so far in that respect? Can you talk to us a little bit about that?
Yeah, I am absolutely an advocate for women in finance or women that want to get involved with managing their money, but just feel so lost. Unfortunately, I mean, not unfortunately, but I shouldn't say that, but men have typically been the ones to take control of the finances. They are typically the ones that seek out investment education. And thank goodness that's changing. Women are starting to come to the table and be like, wait a minute, I need to learn about this stuff, right?
Mm,
And I've been in this industry now for over a decade, and I know that it can be difficult for women to find the confidence to come and say, I don't know what I'm doing, and I don't feel good about it, right? And they don't want to feel like they don't know how to handle their money. So now I'm finding with voices, female voices that are out there, which I'm not the only one. There are many amazing females in finance that are spreading their voice, encouraging more women to be okay with asking these questions, not feeling stupid. Don't feel like you're asking a dumb question. And this goes for everybody, really. There's probably
mm.
people across all spectrums that have that feeling and that experience that they don't want to sound stupid. So, yeah, all I'm doing is I'm trying to make this approachable. I'm trying to be approachable for women to feel like they can come to me and ask me questions. And I feel like I've been pretty successful with that. My Instagram is actually, I think, like 90% female followers,
Wow.
which is funny because my YouTube is like 90% male followers.
Wow.
So it's very, very crazy. But yeah, I'm very proud of that. And I've had a lot of women, join my programs and get involved with some of the stuff that I'm doing. And it's just amazing to see more women in the space feel comfortable.
Excellent, excellent. Jay, you wanted to touch upon something that you spoke about before previously. Go ahead, Jay.
Yeah, you know what? And sort of as we start to wind down, I want to know what you have a shopping list, and can you give us a bit more information about what you like right now, about what is on your shopping list?
My investing shopping list. Yeah,
Yeah.
that's what I call it. Yeah, so obviously, I think that the S&P 500 index is looking at more and more attractive. Um, it's bouncing back a little bit, but we don't know where the bottom is going to be. But we're down, I think we were down at one point 20% from the highs. We bounced back a little bit from there, but I think that anytime the market is down 20%, you need to pay attention. And that's typically historically been a great time to start buying some stocks. So I
Yeah.
like scaling into the index here. I think that there's going to be a lot of uncertainty, so we don't know where the bottom is going to be. That's okay, but at least you are getting some capital into the market just in case we see a reversal, right? And you got to think long term anyway. What happens over the next year might be a blip on the radar anyway, and it may not matter if you didn't catch the bottom. So I love the indices, particularly the S&P 500 because it's diversified. As far as individual stocks go, I think I might get some flack for this, but I think Meta is a very interesting proposition right now. I think that they're getting a lot of hate, and people think that, Zuck's running it into the ground right now with the metaverse stuff. But I think that the valuation is getting compelling and kind of giving you that option just in case, just in case the metaverse works. But if it doesn't work, the business is, the advertising business, I feel is great business, and it's going to continue to be a great business. So I think that there's actually more to like about Meta than to dislike, especially with the assets they own. And advertising is not going anywhere. Uh, so I like Lululemon. Have you guys heard of Lululemon?
Yes.
The great Canadian company.
Yes, yes. Okay, I know this is definitely a chick pick, but sometimes women have different perspectives, and Lululemon has been a beast of a company. I've been a shareholder of Lululemon now for years, since like 2016, and I've been buying more of the shares. I think that they're going to continue to see a lot of growth internationally. Um, they still have a lot to be seen on the men's business side. There's a lot of men to convert over to Lululemon, which is you guys will get there. If you're not converted yet, you may be converted soon.
I think I've
So
sorted
that's
out. Mrs. Sloth's Christmas present has now been sorted out. It'd be great for your share price.
Oh yes, trust me, she'll love a pair of Lululemon leggings, yoga pants. But yeah, that's a name that I like as well. And yeah, that's a few.
Yeah, interesting.
That's
Nikki.
great. Well, you know what? For people who want to follow you, what are the different streams that you're on that people could stay in touch with you and see more about what you're about?
Yeah, I'm on Twitter. I'm at She Talks Finance on Twitter, YouTube, Instagram. I did start TikTok, but I just started it, so there's not a lot going on there. But yeah, I'm at She Talks Finance across all social media, and then shetalksfinance.com is my website. But if anyone watching is interested, follow me on YouTube or subscribe to my YouTube channel. As you guys found, I work very hard to try to put out high quality content there. So I would appreciate a subscribe.
Definitely. I would echo that. Fantastic content. That's how I discovered you, Nikki. And can't reiterate that enough. Really, really important to follow Nikki, to subscribe across all of those different media platforms that she mentioned. Nikki, I think we've had a great discussion. I really enjoyed it. Jay, any final words from yourself?
No, what's great though. Sorry, I said no, and then I'm gonna say something. Yeah, you know what? I'm so happy to see what you're doing. My mom was sort of one of the forefront of affirmative back in the days when I was growing up. It was called affirmative action, and I grew up in a very unique household with a strong woman who fought very hard for women to be treated with equality. And I want my children to see, my son and my daughter to see people like you to continue to show that it's not just a men's field, that you can control your own finances and be in control of your own financial literacy. And you're a great model for that. So thank you very much.
Yeah, I appreciate that. I bet your mom is awesome.
She was a fantastic role model to have. Absolutely.
Yeah.
That's a great note to finish on. A great note to finish on. Fantastic. Thank you so much, Jay. And Nikki, thank you ever so much for now. That was episode 26 of the Sloth Investor podcast. Until the next time, see you later, folks. Bye for now.
See you guys.
Thanks, guys.